Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500, being recorded on Saturday afternoon on March the 23rd, 2024. I apologize for getting this posted a little bit late on Saturday, but I have spent the better part of the day looking at my counts, dissecting my counts, trying an alternate count, and just to kind of look through to see where everything is. As you could see, I need to just make sure that I take off what I'm not using. So I have been through many different iterations and attempting to work through what I think the markets are actually going to be doing. Now, I continue on my big picture to look at the market as being involved with putting the finishing moves for a primary B wave counter trend rally as a part of a larger cycle degree fourth wave. Now, inside that cycle degree fourth wave, and I'll just move up one more so that you can see it, the cycle degree fourth wave will consist of an ABC of primary degree, of which I have the A wave in. That bottom was formed in October of 2022. From that level, we have been involved in a primary B wave counter trend rally, which will also consist of an ABC in the up direction, so it's a rally. Now, we have completed waves A and B. We're inside the C wave, and that is where I spent a great deal of time just to kind of really wrap myself around what exactly are the markets doing, and then how can I balance that out with what the cycles are now suggesting and indicating. So I'll start just by beginning with some of that cycle work. The market has been very strong off of the October 2023 low, which is where I've placed intermediate wave B of the primary B wave. So we have been in a 5-wave sequence up off of that low. And it's going to be counted as 5 waves of minor degree. And so within that, we have completed minor waves 1, 2, 3, and 4. And you can see those here in the weekly chart. I'll bring this back down now to the daily chart so we can see them a little bit cleaner. Now here, I went through several iterations about what exactly is all this doing. And what I ended up doing was, again, relabeling and pushing that third wave higher. So its completion point is higher. And so we're still in that minor fifth wave to complete the intermediate C wave and in turn the primary B wave. And that in and of itself, I've taken out some of the additional moves and the layers that we're building because of the actual movement in the index itself not being totally clear. But I went back and I'm going to bring it down again, and we're going to take a look at it let's take a look at it on the 4-hour chart so we can see the 1, 2, 3, and 4. And they're right now, I've taken away all of the triangles that I thought that the market was putting in, and that would have been so many happening inside and just going through different iterations. And now balancing this out against what are being really kind of discussed as far as the cycles are concerned. Now, some of the cycle work that I actually follow is through somebody that I actually followed for quite some years, and I respect their cycle work, and that is Steve Miller. And so I read a report, or I listened to a report that Steve was making today, and within that report, he was discussing the fact that the markets are very close, or that a correction is imminent, and that we don't have a signal yet that the correction's actually in force or actually unfolding. But when it starts, it should last approximately maybe about 1 month as the cycle high, and then the cycle rolls over, and then we work our way towards the trough, which would be about 1 month, since we still are looking for that turn. And so that is appearing to be very close to actually coming into play. Now, again, on Friday, the XPX reached a high right there at that 5260 level. In fact, that level was 5258. So basically reaching a resistance level that may have completed a small third wave inside. So before I get to that, let's finish up on what we likely can expect from this correction that is looking to get started very soon. And if we look at our RSIs across the board, they have again reached up into overbought readings, but of importance, they continue to form lower highs. As the market makes higher highs with price, there are lower highs with the RSI, which again does not really present us with there's a lot of strength behind what's going on in the markets, not when the RSI is beginning to just continue to deteriorate. Now, putting that together with the need for the correction, I'm going to come down to the hourly chart. And so now we're coming back from where I've labeled minor wave 4. And so this actually works out to be 5 up. I know it looks more like 3 up, and you can actually probably get away with doing that, but we have gaps in several places. So I've managed to do 1, 2, 3, 4, 5, not breaking any rules. Wave 3 is not the shortest wave, and that wave 4 does not overlap wave 1. I think not even close. So I've left it as 5-wave structure for wave 1. Then it's not really clean, but we do get like a small ABC down for wave 2. And then again, courtesy of a lot of gaps, we have again 1, 2, 3, 4, 5 for wave 1 of 3, and then an ABC down for wave, actually an ABC down for wave A B, and then a C, which did work out to be 5 for a wave 2. This was a little bit more complex and a little bit larger than one would and have anticipated, but still fits without breaking any rules, Elliott rules. Now we're finding our way across this third wave. It is a minuet degree now. So we're looking for the high for minute wave 3. So we have 1, 2, and 3 of minuet degree within minute wave 3. So here we have 1, 2, 3, 1, 2, 3, 4, 5 for the third. And now we're inside wave 4 for minuet wave 4 of minute wave 3. So this wave basically kind of hit resistance pretty clean, right on the nose for minute wave 3. So while I may have to go back and change that, right now I'm leaving it. We get a little wave 4 and expecting probably, hopefully a very quick little rally that brings us back above 5260, maybe just above. But I can put up one additional, if wave 4 is done right there, which would suggest that from Monday morning, when we open, the market will move higher versus lower. If it comes lower and puts a low in below 5220, 5230, let's call it, then we'll make adjustments to this count. But right now, I can put in, actually, let me just go like this. Okay, let's start over. Let's go here. There we go. Put it there. And we're going to go up to the wave 4, if indeed that is wave 4. So we can see that our fibs coming in, the first one is that wave 5 would be equal to wave 1, and that puts us at 5301. So for the cash market, that would be an additional new high. And if that then completes wave 5 and minute wave 3, and we begin our correction, it would be extremely appropriate because, again, this correction, once it gets going, you basically we're looking for maybe a 5% drop. And 5% would bring us back to 5,000, possibly as low as 49.80. Now, wouldn't really be looking for quite that low in a wave 4 because it'll cross wave 1. So I'm still going to be looking for something a little bit more shallow and then go up in a minute or for minute wave 4. So again, the correction may give us further information in terms of what actually is happening in this market and what really additional adjustments I may have to make on this corrective phase. So there's still a lot. So I've tried to put it together to what fits and what works right now in terms of this continuing to the upside. We do have a correction that is due, and there is a strong possibility that it'll be like a 5% correction, or at least now if it comes up to 5,300, then the first stop is going to be right back here at 52.29, 52.30. If it comes down lower, then of course we're going to be able to put the small 4 and then we will readjust the levels. But first line in defense for a little bit larger fourth wave, right? So if we're putting the minute wave 3 here, minute wave 4 would expect to come back and bottom in the area or in the price range of the fourth wave of a lesser degree, and that's going to be right here within the minuet. So while I'm looking for it, and it might take a month, but that would suggest that wave 3 is going to go up higher. So we get past 5301 and we end up closer to 5350. This is all basis the cash. So now outside of that, I have one calculation for minute wave 3 that since the 100% has already been reached, that's on the minute degree, that resistance level of 5260. That I suspect will be taken out. And then in case that brings us up to the 1.618 for wave 3, and that brings us to 5386. So we might have a very strong rally yet as this particular one of the shorter term cycles is continuing to kind of top and turn. So we shall see. So there's different forces, there's different things that are going on. And as far as, let me just double check something in terms of what comes out next week in terms of economic data. So on Monday, we have new home sales, and then we have 3 Fed presidents and governors out speaking. On Tuesday, we have durable goods and Case-Shiller home price index and consumer confidence on Tuesday. Wednesday, nothing. Thursday, we have initial jobless claims, GDP, Chicago Business Barometer, and pending home sales. So nothing super strong, let's say. But Friday, the end of the month, on Friday, we have U.S. trade balance, retail inventories, wholesale inventories, and then the PCX. And then there, right about 11:30 a.m., Jerome Powell will be speaking somewhere. And interesting that he'll be talking after the PCE data is out. So again, we do have some triggers that could get us going in a corrective phase, but the beginning of the week may still see a more bullish tone to the market. So if we manage to get ourselves up above 5,300 and midway up, then that 5% decline will be easier to take and not disrupt a whole lot within our accounts. So that's the cash market. Now, one thing that I did do, and I removed the what I was calling the 4, but I've always had it set at a 5 period, and I've taken out the 8 period. On the longer term charts, they're not as effective, and I started to feel like they were getting in the way. And I've combined them. So this green line that intertwines with all of the market here is the 13 period. So it's a 13 moving average. And that actually, on a cyclical basis, follows the cycle very cleanly. And as this market rallies, and I think you'll see it a little bit stronger in the futures market, you'll see how that when it dips below, we get a little bit of a nicer sell, but when it stays above, it comes down, touches it, and rallies. And so what it's done is it's done it twice, and this monitored that rally, Now it's come down, touched it again, and sitting right at it as of Friday's close. So maybe we'll see it bounce off of that, put in this fourth wave here, give us the fifth wave, get it back up and above 5,300, and then we'll be set up for that little bit larger correction. Now, over in the futures market, in the ES, it's the same picture. I've gone out and I've made some adjustments, and it's still what it does suggest, of course, is that we remain within that primary B wave rally, and that intermediate waves A and B are complete at the levels, and that's not what I changed. So again, I went into the S&P and I started to take down a lot of the internal accounts because I started to find them a little bit confusing. And so I thought, no, time to clean up the count and to really look at what I believe is going on. Because again, the market does remain and sending out more bullish signals that they're not finished. The upside is not finished, even though we are expecting a correction in the market on a cyclical basis, plus just where we're arriving, the height at which we're getting, we should start to get a little bit larger of a correction. And I'm still looking for additional new highs based on the fact that we remain within the minor fifth wave, which will complete the intermediate C wave. And within that, I find that on the daily, you got the A, the B, we're inside the C. C wave will be 5 waves of minor degree, 1, 2, 3, and 4. So let's go down to the 4-hour chart where I can open it up from there and we can take a look at some of the internals in here. So again, here as well, I have basically taken out the triangle pattern and counting all of these threes a little bit differently. Now, I'm sure I'm going to get a lot of people that may disagree with that, but bear it out as we look for the market to continue to climb. Now, so what the change comes in is that I've moved the minor degree up a little bit. And so I have minor 1, 2, 3, and 4. And again, I went over this. I tried different combinations. I put a lot of things on my chart, tore it down, rebuilt it, tore it down, rebuilt it, and tore it down and rebuilt it. And I'm serious that I spent a lot of time getting into the count, not necessarily, of course, to ensure that it's that of its accuracy, but to continue to follow that I do believe that the market still has upside. And the wave count as I had it allowed for it, but it was going to be coming in positions that really shouldn't move as far as what was kind of being forecasted out. So I readjusted the labeling. We're still looking for highs, so we're still within a minor fifth wave up, but within that, I believe that what we're reaching here in the futures market is also a minute third wave. And so bringing this down out of that and bringing it into the, putting it on a 1-hour chart, again, there's the 4. I'm making 1, 2, 3, 4, 5, and very, very slight right there, a slight almost touch, but not quite. And that would have been wave 4 to wave 1. And so it's 1, 2, 3, 4, 5. And here's 5, and I know people have a problem there, but it does count out as 5. And as does this, and as does that. So it's 1, 2, 3, 4, 5. Now, I'm open to hear what other people have to say. If they still want to just believe that this is 1 and then it's ABC, you know, again, figuring out what all of this is, like A, B, and then a C for wave 1. Okay. Now A, B, C still coming in, but they're making this more of a 3-wave 1 instead of a 5. And then 2, and then this, it's minuet wave 1 of minute wave 3. And then minuet wave 2 of minute wave 3. A little bit, not quite creating a new low below that, but it does fit and it does not break any rules. So there is minuet wave 2, and then 1, 2, and then a 1, 2, 3, 4, 5 for wave 3, and then again the wave 4. So I'll be looking for this 5th wave up. Now here we have it again, that we can go from here, and we want to, no, I just want to go ahead and touch that. Hold on. Sometimes the mouse just really wants to play games with me. No, dang. I like being very accurate, particularly in this case here. So let me try that one more time. Come on now. There you go. And sometimes my hand shakes, huh? And it'll be close enough. And then we're going to go to that low, which was on the secondary close at 5 p.m. Eastern. So here, we're looking for a little bit of a rally. If indeed this is where I'm going to put the 4, I'm leaving that open in case we have a little bit of additional downside. That the 618 is 53.65. Now, most common, of course, is that wave 5 will be equal to wave 1, and that is at 54.13. And we could get there on Monday. We can get there overnight. We can get there in glowbacks. Markets have been noted to just really kind of get a little crazy. But 53.65 is still a strong rally for the S&P, but very, very possible. This would be very strong rally in a single day for the S&P. We've seen it, but it sort of is starting to really put the pressure on. It's like, wow, where's that top going to come in? Now, again, minor wave 5, the 100% is at 54.85. And then here, the 1.618 is 54.95. So again, if this fifth wave is really going to just be very explosive and it takes a day or two for it to get up there, well, so be it. But still, we do have levels. Now, what do we got as well? I have all the way up here. So in essence, what really starts to break down, or what made me want to really start to review the count, is how far the market will push above 1.382 for the irregular B wave. So in essence, also what I will bring up now, have not really made any firm decisions, is because I did actually also go back to take a look at how I got myself here to declare cycle wave 3. And there are others that have a little bit different count in that respect. And to be honest with you, I went all the way out. And that would mean that we're recounting from this low, which is a primary wave 4, which was at the great financial collapse of 2008, 2009. And if that's not primary 4, then what is it? But if you're going to drop that to an intermediate degree, it just does not work anymore. Even if I'm coming in here and leaving that as primary 4, I don't see how this can be anything else but primary 5. So I really attempted to break down and look inside of all of this to see what this could be. So even if we're leaving this intermediate 3, intermediate 4, and this would be intermediate 5, it still comes in as primary wave 5. And that's kind of how I am leaving that for right now. I've had it in other points where I've had this as primary 3, primary 4. I made that adjustment, but it still works out that this is a 5-wave structure. And this is 5 up, and that's primary 4, and this is primary 5, and then finishing off cycle wave 3. So I have really gone over that. I've gone over this, and I continue to feel that the count that I have is the most workable count. And I believe is actually what the market is doing. Now, we are not in, I don't think we're in normal times. I think that we have a lot of adjustments yet to be made, or are being made, that affect how fast or how hard a market will rally in a particular direction or drop. And a lot of it, I believe, continues to revolve around zero DTE options and how options have kind of taken over. Now, many are still considering options derivatives. I challenge, it's like, are they the derivatives or are they the underlying? And so what does that mean for our indexes, and what does that mean for an Elliott wave count in particular? Is it going to render Elliott useless on a longer term basis? Right now, my feeling is no, it will not. But I think there are adjustments as to what we would consider. So and what I mean by that is, like, if we're looking at the normal fibs for an irregular B wave are 1.236 and 1.382. So what we have going on is that, is it a 1.382 or is it something else? And that is yet to be determined. So right now I'm leaving it as is and what I have. So here again, I think that what I've just gone over is that I believe that we are finishing a minuet wave 3. So we have a minuet wave 4, which may be done here. We're putting in a minuet wave 5, and that has projections to 53.65, 54.13. And once it's done, then I think, yes, we are going to be getting that correction that the cycle work also agrees with. Now, the depth of that will be left up. That's still out there. But we can see between a 5 and an 8%. And again, if we're looking at the cash market, you're looking at 5,000 down to 49,880, or 8% would be about 4,800 in the cash market. But here we have premium in our futures market still. This is a June contract. So there's still a fair amount. And so we'd have to make adjustments, of course, for that. So now, moving averages, all on the hourly chart. There we go. They're still actually just kind of coming down and touching that 50 on Friday afternoon. Now, if it holds and it bounces up, this is going to stay in line. But right now, they are still in alignment to go up. We started to see the roll, right? We saw the 13 and the 20 roll over a little bit, and that should be expected. If I go out to the daily, which is the more important one to many people, you'll see they are still all in perfect alignment. Perfect alignment. That's the 200, the 50, the 20, the 13, and they're all just nicely sloping higher. So I think we're going to get higher, then we'll correct, and then these will follow. Undoubtedly, they will follow. And then we'll get a finishing move back up to hopefully complete the entire scenario. Okay, that's where I'm going to leave it for the S&P. The next Elliott wave update will be on Monday, the 25th, unless, of course, tomorrow there is an abnormal reaction to whatever has happened yesterday and today, in terms of there was that terrorist attack. I guess it's a terrorist attack in Moscow. Any other developments that may come out of the Ukrainian conflict or the war in Israel. So those plus a myriad of other things. In any case, all of that, if we have a very bizarre opening tomorrow in Globex, I will step in and I'll make a quick update on both the S&P and the NASDAQ. If not, next update will be on Monday.